The housing market is starting to shift, which is good news for those of you that want to buy a house, but there's a catch. Let me explain. Redfin just put out a report saying that there were 3.7 months of for sale supply on the market in January, the most in 6 years. That's a lot different than where we were back in 2021 when there was less than 1 month supply of for sale inventory in neighborhoods across the country. That means if you're shopping for a house, you have more options to choose from, which is good if you're a buyer, but it's not so good if you're a seller. This is one of the reasons why home price growth has slowed down significantly, and we're even seeing home prices fall in the areas where there was a lot of building over the last few years. But this is where I want to remind you, real estate is very local. I'm based out of Detroit, and the housing market here is still booming. And that's why in this video, I want to go over 3 things. Number 1, I want to explain what's going on in the housing market right now. Number 2, I want to explain what this means for home prices going forward. And number 3, I want to talk about what this means for you. So let's jump right in with number 1. But first, here are a few words from my sponsor, Bilt. If you rent where you live, you can finally start earning points on your rent payments through Bilt. Rent is expensive, obviously. But if you pay your rent through Bilt, they will reward you with points that you can redeem for workout classes and hotels and flights, or even your next month's rent or more. And you don't even have to check with your landlord to start earning points. There's no cost to join Bilt, and you'll earn points on your rent and your everyday spending. That means you can earn points and travel when you link a credit card to your Bilt account and you spend money at a Bilt partner. Plus, that means you can pay your rent through Bilt, get rewarded with points, and then you can transfer your Bilt points to your favorite hotel or airline. There are over 500 airlines and 700,000 properties and hotels that you can redeem your Bilt points towards. But don't just take my word for it. Try it out for yourself and start earning some points right now. You can use my link down in the description below, or you can use this QR code right here. That way they know that I sent you, and see how it works for yourself. To really understand the housing market today, we have to take a step back and understand how we got to where we are. So let's go back in time to right before the pandemic, the beginning part of 2020, where the median home price in America was selling for around $286,000. It was actually a little bit less than that, but I'm rounding up to $286,000. If you went out and bought this home and you got a 30-year fixed rate mortgage, you'd be paying around 3.6% on your mortgage. Now, to keep things simple, I'm going to assume that you put $0 down. I don't recommend that, but let's just assume for this example, it put $0 down. You finance all $286,000. Your monthly payment would be around $1,300 a month for the median house in America. Well, let's fast forward 5 years to the beginning part of 2025. Now, the median house in America is selling for $446,000. And you're not going to get a 3.5% mortgage. Instead, you're probably going to be getting a 6.5% mortgage, assuming you can get a pretty good deal. And now, assuming you put $0 down again, which I don't recommend, in this case, now your monthly payments have gone up to $2,819 a month. And the reason why this is so important for you to pay attention to is because home prices went up by around 56%, while at the same time, the cost to actually own that house, in this case, has gone up by around 116%, while at the same time, the median household income in America is expected to have gone up by around 20%, which means, hey, you probably got a raise over the last 5 years. But for the average person, the raise that you got did not keep up with the price of homes, let alone the cost of actual home ownership, because the cost of home ownership goes way beyond just the price of the home. You have to borrow more dollars, but you also have to pay more interest to borrow those dollars, unless, of course, you're buying the house all cash. Now that you understand how we got to where we are today, let's talk about what's actually happening today in the housing market when it comes to pricing. Let's go back to real estate economics. At the very core, the price of a house depends on supply and demand. When you have more buyers than sellers, the price of a house generally goes up. When you have more sellers than buyers, the price of a house generally goes down, because when you have more buyers competing against each other, you see more bidding wars, which push home prices up. When you have more sellers competing against each other, they cut the prices of their homes to attract a buyer to go out and buy it. And what we're seeing happen right now on the demand side is that mortgage rates have been falling. And as mortgage rates have been coming down, what we've also seen is that mortgage applications have been going up. So it looks like if mortgage rates continue to go down, well, there's still a demand to buy houses, and the demand might be going up if mortgage rates continue to go down like we've been seeing the last few weeks. Now, this is really nothing new. We've been seeing a ton of demand to buy houses ever since the pandemic. But the thing that's interesting today is on the supply side, because what we're starting to see is the inventory of homes available for sale starting to rise. This is a chart from the Federal Reserve Bank showing the inventory of homes in America, and what you can see is for the last few years, the inventory of homes has been steadily rising minus these small dips, which have to do with market cycles because there's just generally less homes for sale in the wintertime. So yes, we still have high demand and potentially rising demand depending on where mortgage rates go, which that's still a big question mark as to where mortgage rates are going to be in 3, 6, 9, and 12 months. But it also looks like the supply of homes has been rising steadily. Now, as a finance nerd, this is where things really get interesting, because as supply starts to go up, the question is, what are we going to see more of? More supply or more demand? And this can indicate where the economy is going to go and where the housing market's going to go, because if we do see a pullback in home prices, that's good if you're going to buy a house. But that's not good if you own a house or you're thinking about selling a house. If I go out and I buy this house for $500,000 and I sell this house for, let's call it $510,000, you might say that I made a $10,000 profit on this house. But if you've ever sold a house before, you know that's not true. Because when you go to sell a house, you have a lot of costs. You might have to pay for a realtor. You got to pay for your closing costs. You got to pay for the title costs. And all those things eat up how much money you actually get. Which is why in order to actually sell your house for a profit, you generally need to sell your house for at least 10% more than what you bought it for. So if you buy your house for $500,000 and you sell it for $510,000, you're probably losing money. And that's where things start to get interesting now, because if people buy a house and it's not going up in value, or it's going up in value very slowly, or it's going down in value, well, that can make it more difficult for some of those people to sell. Or if you run into a financial hardship and you have to sell, you can start to see how that could start to create more problems. But again, all roads lead back to real estate economics, supply and demand. We know that there's still a lot of demand to buy a house, and although the supply of houses in America has risen, we're still not at what's considered a real balanced housing market, because according to RE/MAX, a balanced housing market has 6 months of supply of inventory. Right now, we have a little bit under 4 months of supply of inventory. So yes, we have way more supply now than we did 3 years ago, but it's still not there to really be considered a balanced housing market, but the supply trend is going upwards. That's what makes it so interesting in 2025, because if more people start to sell their houses in 2025, more houses get fully constructed in 2025, we could continue to see more supply, but the question is, where is demand going to go? If mortgage rates go up and demand starts to cool down, well, that could help pull home prices even lower. If supply increases, but the demand also stays high, the question is, will that demand outpace the supply or stay equal to the supply, or potentially be less than the supply? But there's one more thing that makes this a little bit more complicated. It's the R word, a potential recession. This is a Google chart showing the number of people searching recession. And what this shows us is people are getting more worried about a potential recession in the United States because of all the craziness we've been seeing in the economy and the stock market and everything in between. And when you have fears of a recession, you generally don't want to make a big, huge purchase because there's the concern that maybe you'll lose your job. And so when you're worried about a recession, people are less likely to go out and actually make a big purchase like buying a home. It could also change if you want to sell your home. It could make you want to sell your home more if you feel like you have a lot of equity and you want to downsize. Or if you own a home and you don't want to potentially move into a bigger home, you might not sell your home. And this is something that we don't know what's going to happen just yet, because this is a really day-by-day thing where people are starting to get more concerned. Some days people feel more confident, some days people are really scared. But this is something you want to pay attention to, because if recession fears start to get more serious in the coming days, weeks, and months, well, that could decrease the demand to buy a house while the supply is still rising. That's why I want you to pay attention to this, because we don't know what's going to happen in the economy. But we know that when people are worried about the economy, people are less likely to buy a house because they don't want to make that big decision. So now that you understand where we are in the housing market today and you understand what's going on when it comes to housing prices and real estate economics, let's talk about what this means for you. And I'm going to say the same thing that I've been saying, which is, if you want to buy a house, remember, you're buying a house to make memories, you're not buying a house to make money. If you want to buy a house to make money, go out and buy a rental property. Which means if you want to buy a house, great. Make sure you can afford it first. And when I say afford your house, that means afford three things. Afford the down payment, afford the monthly payment, and afford the moving costs. Now, look, I gotta remind you, I'm not a financial advisor. I'm just a random guy on YouTube. Investing has risks. You're never guaranteed to make money when you invest. In fact, you will lose money at some point, so make sure you always do your own due diligence and never blindly trust a random guy on YouTube and talk to a financial advisor if you have specific questions. But if you want to buy a house, understand that when you want to afford the down payment, for me, that means having at least 20% down to buy the house. Now, this makes a lot of people upset because they say, Jaspreet, do you not realize how expensive houses are? How do you expect me to have 20%? Here's the reality. If you don't have any skin in the game, you're the first person to file for foreclosure when bad things happen. And trust me, I know bad things happen because some of the best real estate investment deals that I have bought were out of foreclosure. From people that thought, oh, I don't need to have any skin in the game. It's not important. Let me go out and put as little money down as possible. Well, just telling you how it has played out for me. The second part is being able to afford the monthly payment. Now, banks are going to have a very different definition than me when it comes to affording the monthly payment. And for me, when it comes to affording the monthly payment, I don't follow what the banks say. What I want to do is I want to know how much I can afford within my money system. So if I follow something like 75, 15, 10, which says for every dollar that I earn, 75 cents is the maximum that I can spend, 15 cents is the minimum that I invest, 10 cents is the minimum that I save, that means I live off of 75 cents of every dollar that I earn. Out of that 75 cents of every dollar that I earn, I have to pay for my mortgage, my insurance, my groceries, my vacations, and everything else. If I can do that, I can afford it. I don't consider my mortgage payment an investment. That is one of the worst things that you can do is make your mortgage payment thinking that you are investing in your future wealth. No wealthy person talks about how they became rich and wealthy because they paid off their house. You can pay off your house and have a lot of financial stress relieved, but it's not going to make you rich and wealthy. If you want to get wealthy, you got to invest your money into things like stocks, into things like real estate, into things like a business. Being a homeowner in a paid off house can relieve stress, but you still got to pay the property taxes, you still got to pay the insurance, you still got to pay for the maintenance, you still got to pay for the upgrades, and you need an income to do that. So you got to understand the difference. So you got to afford the down payment, you got to afford the monthly payment, you got to afford the moving costs. As somebody who just moved very recently, I can tell you that number one, movers are expensive. Number two, your wife or your husband will probably want to make some upgrades. Those are expensive. Your wife or your husband may want to get some new furniture, and that is expensive. I'm telling you from experience because, well, we made some upgrades and bought some new furniture, and it is expensive. But before you make that decision, make sure you can factor these costs in because the last thing you want to do is move into the house. Now you start paying for these upgrades and changes and new furniture. Now you have to go into credit card debt to fund these things. Budget for this before you actually buy the house. Have the money for the down payment, the mortgage payment, and the moving costs, and now you're gonna set yourself up for a lot less financial stress when you go to buy this house because a lot of people think they're buying a house to build wealth when it turns out to become a money pit. If you treat your house like a liability, well, now you don't got to have the financial stress because you know you're still investing your money to build wealth. And again, if you're an investor and you want to stay up to date on what's happening in the financial markets, my team at Briefs Media publishes a free newsletter called Market Briefs, where we break down everything that's happening in the markets for free. And I have that link for you down in the description. President Trump is now considering getting rid of the income tax. Take a listen.
As I said in my speech last week, instead of taxing our citizens to enrich foreign nations, we should be tariffing and taxing foreign nations to enrich our citizens.
The Fair Tax Act of 2025 was a bill proposed which would effectively abolish the IRS.